Hello and welcome back. Let's go across to Saugata Bhattacharya now. Saugata, what's the view as far as CPI is concerned? That will be the more important number. What to watch out once the numbers come out?
So CPI, hi. First, thanks for having me on the show. CPI, we are thinking 2.6%. So just a little bit above. So rising slowly. I think that's the key. Depending now, of course, I mean, we might be terribly off the mark. I mean, if food prices actually are even lower than what we expect, but that's the original print.
Right. When we look at what's happened with the recent monetary policy, the rate cut that has come in, what sort of inflation projections do you make coming out of there? Do you think that they have, been slightly lenient, or it's fine when, inflation is so low, just cut rates, even if, the budget was a little bit inflationary?
So, I mean, going forward, I mean, in Q1, Q4 of this quarter, this year, FY19, I think they're very close to where we are at. So about 3.2, 3.4%. But going forward into FY20, so this is the first time, because typically you remember till now, I mean, the inflation projections that they had was a bit higher than that of the markets, and definitely ours that we know. But this was the first time that their projections of Q1, then H1, and then for the full FY20 was slightly lower than what we are projecting. But given that, I mean, even if they miss the mark by 0.2% or so, it's not going to be a big problem. Of course, I mean, there are so many imponderables going forward, and that's what we were a little worried in terms of the timing, front-loading the cut. So our sense is that you are already seeing crude prices beginning to inch upwards. I don't know how far things will go. Then food prices, and particularly the risks that might come in from a weak monsoon. I mean, we have had 3 good monsoons. Statistically speaking, the probability of a monsoon failure is relatively high. And most importantly, I think this is the key question now on what are actual growth projections. How is growth likely to evolve? Because more than anything else, the pricing power of corporates will begin to impinge on core inflation. And we are projecting core inflation to be coming down. So if demand actually revives, capacity utilization levels, rates that you saw are already pretty high. Potential output growth is not increasing, the output gap is closing. So if corporates begin to resume pricing power, that will have an impact on core inflation, and that will have an impact on headline inflation.
Okay, great. To get perspective, let's talk a bit about the IIP as well. Now, last month, industrial growth unexpectedly fell to a multi-month, a 17-month low to be precise. What is the view this time around? Do you expect a recovery?
There will be a recovery. We are projecting a 1.5% growth, so it's not a blowout massive recovery. But all the numbers on which we base our projections, particularly CV sales, and you've already seen the 2.6% 8 industry core sector output at 2.6%, which is fairly weak. And even the 2.6% is being driven generally only by cement. All the other components are down, so as a consequence of which the primary goods component, which is essentially infrastructure type of industries, so that is likely to do bad. CV sales have been very poor, CV sales and production both. Exports have been relatively weak. So the only segment in this that is likely to be doing well based on the cement sales is infrastructure. So I don't think there was a significant base effect in the December of 2017. So it's not likely, the base will not push it up, and underlying growth remains weak. So I don't know whether it will be 0.5% or 2.5%, etc. But I think the probability is that growth will be weak for the month of December.
Right. When we just talk about growth, you look at the electricity number. I think the number is lowest for really a while. Power demand coming down, it's really something which had not happened so far. So do you think that that's a cause of worry about what happens over there, and maybe it could be because of receivables of various companies?
So that's an interesting observation. I mean, we have seen this, that electricity growth, and particularly with the harsh winters that we have had this time, you would have expected electricity demand to have increased and electricity prices, market prices of electricity to have also have increased. Now, I'm not very sure. I mean, we haven't heard of particular distress in terms of discom payments, etc. But that is an indication of what might be a problem. Of course, I mean, going forward, electricity growth will not be as good because, I mean, you know, I mean, the disparities that you've had between the various geographies, that's coming down because of the better transmission systems, etc. So power is flowing between areas. But this is a gradual process. I mean, this is not just a monthly process or a quarter number. So